Hello traders, it's Monday, October of 16. This is Alan Hong, market analyst of GKFXPrime. So I'm gonna share my daily analysis through this video. And first of all, let's review the major market movements. So the first instrument referring here is the dollar index info hourly chart. So the US dollars was fluctuates against the basket of the major currencies on Friday. It was later changed at 93.62 after mixed consumer inflation data clouded the outlook for another rate increase by the Federal Reserve in the coming months. So the Labor Department reported Friday that consumer prices rose 0.5% last month after advancing 0.4% in August. So economists had forecast at a 0.6% increase. So it was the largest increase in 8 months, but was mainly driven by soaring gasoline prices after hurricanes hit the south and US underlying inflations remained subdued. So the report came after the minutes of the Federal Reserve September meeting published on Wednesday showed many participants express concern that low inflation readings this year might reflect not only transitory factors but also the influence of developments that could prove more persistent. So the data tempered the expectations that the Federal Reserve will hike interest rates in December for the third time this year, and the expectations that US rates will rise help support the dollar by making US assets more attractive to yield-seeking investors. Well, the euro was touched lower, with EUR-USD pair dipping to 1.1822 in late trade after European Central Bank President Mario Draghi said the Eurozone still requires substantial monetary stimulus as inflation remains mute. Sterling was gained ground amid hopes that Britain could be offered a 2-year Brexit transition deal. So with the pair GBP-USD at 0.2% to 1.3287 on late Friday and ended the week up 1.7% after suffering its worst week in more than a year the previous week. And Aussie was felt further in Asia on Monday, with the AUD-USD traded at 0.7875, down 0.25% after China reporting faster than expected producer price gains, showing inflation pressures are building in the economy, which is a key export destination for Australians. So China reported September prices data gained 0.5% compared to an expected 0.4% rise seen on month-on-month and up 1.6% on year as expected, while the producer price index jumped 6.9% compared to an expected 6.3% gain. Having a tap in commodities markets, gold price was rose on Friday, settled up 0.69% at $1,305.40 a troy ounce, as weaker than expected US inflation data aided to doubts over the Federal Reserve plans to raise interest rates once more this year. So gold price is highly sensitive to rising rates, which leave the opportunity cost of holding non-yielding assets such as bullion, while boosting the dollar's immediate price. So a weaker dollar makes gold's price, which are denominated in the US currencies, cheaper for foreign buyers. And oil price was settled at a 2-week high on Friday, with the US West Texas Intermediate crude price tack on 85 cents or around 1.7% to end at $51.45 a barrel by close of trade. So amid geopolitical uncertainty in the Middle East raised the threat of supply disruptions, and particularly in the wake of US President Donald Trump's refusal to certify Iran's compliance with the nuclear deal. So as was expected, Trump on Friday decided against certifying the 2015 Iran nuclear agreement, raising the risk of doing business in the oil-rich Middle Eastern nations. So the Persian nation is an OPEC member and key Middle Eastern oil producers, and meanwhile investors monitored the ongoing unrest in Iraq following an independence referendum in Iraq's Kurdistan regions last month that threatens to disrupt the operations of a pipeline that carries 500,000 to 600,000 barrels of crude per day. So signs of bullish Chinese demands as well as falling stockpiles in the US aided to the upbeat mood. Despite the bullish signals, analysts warn that the organizations of the petroleum exporting countries needed to extend its agreements to reduce oil output beyond its current March 2018 expiry dates in order to rebalance the markets. So the original deal struck nearly a year ago between OPEC and 10 other non-OPEC countries led by Russia was to cut productions by 1.8 million barrels a day for 6 months, and the agreement was extended in May of this year for a period of 9 months until March 2018 in a bid to reduce global oil inventories and support oil prices. So the cartel's next meeting is set for November 30 in Vienna. So now we're gonna review the highlighted economic data that released on Friday, as well as the focus data and events for today, Monday. So on late Friday, last Friday, United States has released its consumer price index, retail sales, okay, with a slightly disappointed result with 0.1% growth of consumer price index in September and 1% growth with the retail sales, right? So average for this series of data is considered slightly disappointed. Okay, so after the US series of data, so the US Baker Hughes has released its oil rig count, the weekly rig count, so as for 743 rigs, alright, so which is 5 more lower than the previous of 748. So as for Monday today, we can focus on the data of which will be released from Chinese, okay, so already released on during the Asia trading hours, including the consumer price index and producer price index for September, and there is 0.5% for September of consumer price index in China and 6.9% growth for producer price index. So both of these data was boost up the economy outlook of China. So besides that, European Union is going to release a trade balance during the European trading hours for August, as well as during the North American trading hours. Bank of Canada is due to release its business outlook survey. Technical analysis sessions. So first instruments, we're referring to the Great British Pounds against the US dollar pair in 4-hourly charts. So the sterling gained ground on Friday, and we hoped that Britain could be offered a 2-year Brexit transition deal. So the pair GBP USD has surged to the level near to Fibonacci retracement levels of 50 at 1.334, but it was failed to break through. So this was a signal to retrace in short terms, and currently it is hovering a tad above the support level of 1.327. But however, the trend direction remained pointing downwards, thus closing below 1.326 will suggesting for further downsides and fall towards the next support level at 1.318. On the upside, with a closure higher than the trend direction, shifting freeholds at Fibonacci retracement level of 50 at 1.335 will provide a signal for shifting trend direction to become uptrends and could surge further higher towards the next resistance level at 1.341. The single currency was weakened on Friday, with the pair EUR-USD touched lower after European Central Bank President Mario Draghi said the Eurozone still requires substantial monetary stimulus as inflation remains muted. So against the dollars, it dipped to the level between the both moving average line in 4-hourly charts, signaled to be traded flat in short terms, while trend directions remain pointing downwards as the recent high didn't close above the Fibonacci retracement level of 50. So thus closing below 1.176 will suggesting for further downsides and could fall towards the next target at 1.167. As for the upside, the nearest resistance level comes in at 1.183. On fundamental, Eurozone trade balance is due to release later today during European trading hours, which might bring further volatility to the single currency. The Kiwi gained ground on Friday with the pair NZD-USD surge above the resistance level of 0.715. So the both moving average line in 4 hourly charts, which form a golden cross, suggested to rebound further in short terms. So closing above 0.72 will suggesting for further upside and could surge higher towards the next resistance level at 0.724. On the downside, only with a closure below the recent low at 0.705 will open up a door for further bearish. Then we could refill the next support level at 0.698. But however, New Zealand's inflation data is due to release on Tuesday in Asia hours, and it is expected to provide further clue on New Zealand's economic outlook. The Aussie has fell further in Asia on Monday after China reporting faster than expected producer price gains, showing inflation pressures are building in the economy, which is a key export destination for Australia. So the pair AUD-USD rebounded from the Fibonacci retracement levels of 50 at 0.773, which suggesting it's been rejected to shifting trend directions to fall further. So with a closure above the resistance level of 0.794 will provide a signal for continuations of uptrends and could surge further towards the next resistance level at 0.812. So on the downside, only with a closure below 0.772 will allow to fall further as trend direction shift becomes to downtrends. Alright, so on fundamental, the Reserve Bank of Australia is due to release their meeting minutes on Tuesday in Asia hours, which may provide further indications on their monetary policy. The safe haven Japanese yen was fluctuates against the dollar, with USD-JPY pair dropped below the support level of 111.9, suggesting to retrace in short terms and could fall towards the support level of 111.1. But however, the pair remained traded in an uptrend structure, thus with a closure above the recent high at 113.5 will provide a signal for continuations of uptrend. Then we could refill the next resistance level at 114.4. As for commodities, gold price rose on Friday as weaker than expected US inflation data aided to doubts over the Federal Reserve plan to raise interest rates once more this year. So currently it traded near to the Fibonacci retracement level of 50 at $1,309 a troy ounce. So closing higher than these levels will suggesting for further upsides and shift its trend directions become uptrends. Then we could refill the next resistance level at $1,320. On the downside, the first support level can be seen at $1,298 a troy ounce. And oil price has settled at a 2-week high on Friday amid geopolitical uncertainty in the Middle East raised the threats of supply disruptions, and particularly in the wake of US President Donald Trump's refusal to certify Iran's compliance with the nuclear deal. So the US West Texas Intermediate crude price continued traded higher and surging towards the previous high at $52.80 a barrel. Referring to the MACD indicators, the both movement lines were pointing upwards. Additionally, with the upward momentum, it is suggested to move further higher in short terms, and on the downside we could refill the nearest support level at $51.20 a barrel. To date, please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.